Amazon seeks to be the world's most consumer-centric business. According to the Form 10K, Amazon is guided by 4 pillars. The first being customer obsession rather than competition focus. Second, passion for invention. Third, commitment to operational excellence. And last, long-term thinking. The way that Amazon is structuring its operational business is in 3 segments. The 3 segments are North American operations, which includes net sales from their online business, so things that you and I would buy on Amazon.com, and also all the subscriptions that people might have, such as Amazon Prime and Photos and whatnot. The second segment is the international segment, which is the same as North American segment, but just for international users. Any sales that Amazon makes in those international markets would go under that segment. And the last segment is Amazon Web Services, also known as AWS business, which deals with the data centers, the storage, the cloud computing services that Amazon provides to startups, enterprises, government, schools, educational purposes. All of that is lumped into AWS segment. For the year 2020, Amazon has reported 24 risk factors on its most recent 10K. And today I will be going over the top 5 of the 24 risk factors. And then at the end, I will also go through the contingent liabilities reported by Amazon. Again, contingent liabilities are not liabilities in the sense that they do not appear on the balance sheet, but they are still appearing in the notes. And if things do not go the way Amazon predicts things to go, such as court cases, if they don't go in Amazon's favor, then those numbers can be pushed onto the balance sheet. So again, it's important that we look at the liabilities that Amazon might have to pay, the obligations that they might have early on in their notes to get a better foresight, an idea of what might be happening in the future if things don't go Amazon's way. So let's dive in and look at the risk factors and the contingent liabilities for Amazon.
Hey guys, this is the Form 10K, which is the annual report for Amazon. Fiscal year ended in December 31st, 2019. So if you're watching this with me in 2020, this is the most recent annual report that we have on hand. So diving straight into the top 5 risk factors. I went through the 24 risk factors and I highlighted the top 5 that I found. The first risk factor is that we face significant inventory risk. Over here, Amazon states that the inventory risk may adversely affect their operating results as a result of seasonality, new product launches, rapid changes in product cycles and pricing, defective merchandises, changes in consumer demand and consumer spending patterns, changes in consumer taste with respect to our products, spoilage, and other factors. Amazon states that demand for products, however, can change significantly between the time inventory and components are ordered and the date of sale. Amazon says that the components or the inventory require significant lead time and prepayment, and they may not be returnable. So some of the sales may be final, and in case the demand drops, they cannot return those goods that they have already ordered for their inventory. At times, we're unable to sell products in significant quantities or to meet demands during the significant selling seasons. So again, think about the Christmas time where demand just spikes off the roof and they just do not have the inventory on hand to support that increased demand. The second risk factor is we face risks related to adequately protecting our intellectual property rights and being accused of infringing intellectual property rights of third parties. So over here, Amazon says we have been subject to and expect to continue to be subject to claims and legal proceedings regarding alleged infringement by us of the intellectual property rights of third parties. Such claims result in the expenditure of significant financial and managerial resources, injunctions against us, or significant payments for damages, including to satisfy indemnification obligations or to obtain licenses from third parties who allege that we have infringed their rights. Again, all this means is that it can be very pricey for Amazon if someone were to do a lawsuit that Amazon would have to pay a lot of money to them, and it'll cost the company. The third risk factor is that government regulation is evolving and unfavorable changes could harm our business. So in this paragraph, Amazon talks about all sorts of things ranging from, of course, taxation, privacy, data protection, pricing, content, copyrights, distribution, all the way to their unmanned aircrafts and licensing and laws regulating those, to health and safety of their personnel and websites and electronic contracts and so forth. So it's a lot that's covered in this paragraph. and any rules or regulations or laws regarding any of them, any changes in them, could affect Amazon's operations and Amazon's bottom line. Over here, Amazon provides an example that the European Commission announced that it has opened an investigation to access whether aspects of our operations with marketplace sellers violate EU competition rules. So again, the government, the more they interfere or the more regulations that are going to be imposed on Amazon, the way they do business, the more Amazon's bottom line is going to be affected. The fourth risk factor is that we face additional tax liabilities and collection obligations. Over here, Amazon says that these include new obligations to collect sales, consumption, value added, and other taxes on online marketplaces. Amazon also says that our results of operations and cash flow could be adversely affected by additional taxes of this nature imposed on us. In this paragraph, Amazon also talks about how with the new Tax Cuts and Jobs Act, it wasn't very precise as to what and how the tax implications would be for Amazon on certain segments. And so what Amazon is saying is IRS is coming out with these clarifications on how to interpret the law. And in the future guidance, right, as it says right here, as future guidance is issued, we may make adjustments to the amount that we have previously recorded that may materially impact our financial statements in the period in which the adjustments are made. So in case, let's say in 2018 or 2019, when Amazon paid a certain amount in taxes, and then the IRS comes in this year and says the way you're supposed to interpret that law is you're supposed to pay X amount, and X amount is way greater than what Amazon paid 2 years ago. They would have to pay those the obligations, the money, the tax that they owe, not only for this year but also from the previous 2 years. So that can certainly add up, and that's one of the risk factors that Amazon states. The fifth and the last risk factor that I will be going over with you guys is our supplier relationship subject us to a number of risks. Over here, Amazon says that we do not have any long-term agreements with most of our suppliers. What this means is if there is a merchandise, if there is a product that Amazon is dependent on, and that supplier tells Amazon that, hey, Amazon, we're not going to do any business with you anymore, then Amazon would have to go to another supplier, and that supplier might be charging Amazon out of the roof for that product. And the costlier that product is, the less Amazon's profit margin will become, and it will affect Amazon's bottom line if they cannot get that price down from another supplier. Amazon also says that products or practices regarded as unethical, unsafe, or hazardous could expose us to claims, damage our reputation, limit our growth, and negatively affect our operating results. So those were the top 5 risk factors, guys, and now we're going to go look at the contingent liabilities. Hey guys, so before we go into the contingent liabilities, I wanted to quickly show you where they appear on the Amazon's balance sheet. Again, this is like midway point of the 10K. And they appear right here. As you can see, commitments and contingencies, note 7, which is what we're going to be looking at here shortly. And nothing shows up because it's again telling you to go look at note 7 because they don't really have numbers for us. So we go look at note 7, and I have highlighted some of the important things or key takeaways from these commitments and contingencies. So we're just going to go look at what I've highlighted in this passage. Under commitments, Amazon talks about how we have entered into non-cancelable operating and finance leases and financing obligations for equipment and office, fulfillment, sortation, delivery, data center, physical store, and renewable energy facilities. Over here, you can see that they talk about all these commitments as far as their leases go, and the interest, liabilities, financing, obligations, and for the year 2020 their total commitment is $24,409. This is again in millions, so about $24 billion, and it shows you 5 years out, and then thereafter the total liabilities, contingent liabilities, the commitments that regardless if Amazon makes a profit, regardless if Amazon makes money or not, they have the commitment to pay $146 billion. From 2020 here on out until the end of their lease or their obligation. So it is a big commitment that Amazon has. But as far as we're concerned, for this year, for 2020, it's $24,409 million. Next, Amazon talks about how they processed and delivered orders of consumer products for certain individuals and entities located outside Iran, covered by Iran Threat Reduction and Syria Human Rights Act, or other U.S. sanctions and export control law. Over here, Amazon delivered some goods to some folks which shouldn't have been delivered, and they voluntarily turned themselves in. So that's, again, one of the little situations, messes that they got themselves into by processing and delivering certain goods to certain folks. Next, Amazon talks about how we are subject to claims related to various indirect taxes that we again mentioned about in the risk factors. If the relevant taxing authorities were successful to pursue these claims, we could be subject to significant additional tax liabilities. Amazon also talks about how South Carolina is alleging that Amazon should have collected sales and use taxes on certain goods, and if other states follow suit, they might be in for a bigger liability as far as obligations are concerned. Next, we have legal proceedings. Over here, most of the cases that we'll see have to do with patent infringement, except the first one, which says that a number of complaints were filed because Amazon failed to compensate hourly workers for time spent waiting in security line and otherwise violated federal and state wage and hour statutes and common laws. The complaints seek an unspecified amount of damages, interest, injunctive relief, and attorney fees. In December 2014, the Supreme Court ruled in Bus that time spent waiting for and undergoing security screening is not compensable working time under the federal wage and hour statute. And then there are other cases in regards to compensation, but Amazon always says at the end that we dispute any remaining allegations of wrongdoing and intend to defend ourselves vigorously in these matters. The next is for North LLC filed a complaint against Amazon for patent infringement, and they seek an unspecified amount of damages, enhanced damages, attorney fees, cost, and interest. The next is for Ecolis Technology, which filed complaints against Amazon, which claimed that Amazon infringed on their patent for search suggestions and search results. Over here, they do give us a number that it might be about $130 to $250 million in damages. The next is for SRC Labs LLC and St. Regis Mohawk Tribe, which filed complaints for patent infringement against Amazon Web Services. Over here, they say that the complaint seeks an unspecified amount of damages, enhanced damages, interest, and a compulsory ongoing royalty. In May 2018, Rensselaer Polytech Institute and CF Dynamic Advances LLC filed complaints against Amazon, claiming that Alexa voice software and Alexa-enabled devices infringed on their patent. In June 2018, VoIPPal.com claims that Alexa calling and messaging system, the Alexa app, the Echo, Tap, and Fire devices with Alexa supporting infringed on all these patents. So that's quite a lot of things. The patent seeks an unspecified amount of damages and enhanced damages, attorney fees, costs, and interest. In December 2018, Vyom, again another patent infringement which seeks an unspecified amount of damages, enhanced damages, attorney fees, costs, interest, and injunctive relief. And the next is in January 2019, where St. Lawrence Communication LLC claimed that Amazon devices infringed on all these patents, and they seek an unspecified amount of damages, enhanced damages, attorney fees, and interest. In April 2019, Vocalife LLC claims that Amazon Echo devices infringed on their U.S. patent. The complaint seeks injunctive relief, an unspecified amount of damages, attorney fees, costs, and interest. In May 2019, Neardrone Limited filed complaints against Amazon, claiming that their tablets infringed on their patents to do with capacitive position sensor and the enhanced touch detection method. They seek an unspecified amount of damages and interest, a permanent injunction, and enhanced damages. The last comment that Amazon has for us in this section says that the outcome of our legal proceedings and other contingencies are inherently unpredictable, subject to significant uncertainty, and could be material to our operating results and cash flows for a particular period. In addition, for the materials disclosed above that do not include an estimate of the amount of loss or range of losses, such an estimate is not possible or is immaterial, and we may be unable to estimate the possible loss or range of losses that could potentially result from the application of non-monetary remedies. So that's all for the commitments and contingencies in this note. As you can see, Amazon has a lot of contingencies, a lot of court cases, a lot of patent infringement cases associated with a lot of their devices, ranging from their Echoes to their tablets. So in this section, we saw all the commitments and contingencies that Amazon has that are not reported on Amazon's balance sheet.
Hey guys, that is all I had for you this week. We looked at Amazon's business model, the risk factors, and the contingent liabilities associated with investing in Amazon. Please do like, share, and subscribe to this video and this channel. I truly appreciate your time. Thank you.